Hey everyone! Welcome to Economics Binoculars, the channel where we zoom in on all things economics. Today, we dive into a question that feels like it came straight out of a thriller novel. What happens if the US runs out of money? I know, it sounds like the plot of a Hollywood disaster film, but it's a real possibility, and the stakes are massive. Today, we'll explore how the US spends and earns money, what would happen if it all ran dry, and what those in power, Department of Government Efficiency (DOGE), could do to save the day. So buckle up and let's break this down. In today's video, you will learn 1. US debt and spending. 2. US government incomes. 3. What happens when US runs out of money? Let's start with the elephant in the room, US debt. As of 2024, the national debt sits at a staggering $36 trillion. To put that into perspective, back in 2001, it was slightly less than $6 trillion. That's a six-fold increase in just over 2 decades. If we look at a chart of US debt growth since 9/11, you'll see it skyrocketed after the 2008 financial crisis, QE1, 2, 3, debt crisis, hit the debt ceiling and lifted the ceiling over and over again, then surged again during the COVID-19 pandemic due to emergency spending, along with unlimited QE and so on. It's like a snowball rolling downhill, except this one could crush the entire economy. Now, what's the debt to GDP ratio? It's a way to measure how much a country owes compared to what it produces. For the US, this ratio is around 120%. Compare that to countries like Japan, over 260%, and Germany, around 60%, and you'll see the US isn't alone in racking up debt. But when your debt is bigger than your economy, it's a red flag. Here's where all the spending goes. Social Security, Medicare, Medicaid, and defense take up about 75% of the federal budget. Defense alone is a whopping $800 billion annually. And let's not forget interest payments on the debt, which are climbing as interest rates rise. The US spent nearly $475 billion on interest payments in 2023, a number that's only going up. Now let's talk, where does the US get its money? In 2023, the US government brought in about $4.8 trillion in revenue. Here's the breakdown. Individual income taxes, 51%, payroll taxes, 35%, corporate taxes, 7%, other revenue, tariffs, estate taxes, etc., 7%. If you're wondering why this doesn't cover the $6.4 trillion in spending, well, that's the problem. The government has to borrow money to fill the gap. This is done by issuing treasury bonds, which investors, both domestic and international, buy. Fun fact, China and Japan hold over $2 trillion in US Treasury securities combined. But here's the kicker. As interest rates go up, the cost of borrowing rises too. Higher yields on Treasury bonds mean higher costs for the government and, eventually, taxpayers. Alright, here's where things get real. If the US can't pay its bills, the ripple effects would be catastrophic. Think economic chaos on a global scale. First, the government would shut down non-essential services. Federal workers would stop getting paid, Social Security checks would freeze, Medicare reimbursements would stall, and contractors, they'd be left in the lurch. Overnight, millions of people who rely on government funding would feel the pinch. But the fallout doesn't stop there. Investors would lose confidence in US Treasury bonds, which are essentially IOUs from the government. Right now, these bonds are considered one of the safest investments on earth. If that trust crumbles, bond prices would plummet, causing yields to spike. Because bond prices and yields always move in opposite directions. Higher yields, meaning bonds are sold and prices are going down, and the government has to pay even more to borrow money just to cover the spiking interest payment, creating a vicious cycle of debt. Now, let's talk about the dollar. As the world's reserve currency, the US dollar underpins global trade. If countries start doubting America's ability to pay its bills, they might begin diversifying into other currencies like the euro or the yuan. That would weaken the dollar, making imports more expensive for Americans and further fueling inflation. And what about the stock market? Picture this: higher borrowing costs, uncertainty about the government's ability to function, and declining confidence in the economy. The stock market would almost certainly take a nosedive. Companies that rely on government contracts could go bankrupt, and investor panic would spread like wildfire. Lastly, let's not forget the ripple effects on other countries. Many economies are deeply interconnected with the US. A financial crisis in America would disrupt global trade, devalue currencies tied to the dollar, and send shockwaves through international markets. We're talking about a domino effect that could lead to a global recession, or worse. And here's the cherry on top. Credit rating agencies could downgrade the US credit rating, making borrowing even more expensive. This happened in 2011, and just the threat of default caused markets to tumble. Imagine what would happen if the threat became a reality. It's not just a financial problem, it's a confidence problem, and once that's lost, it's hard to get back. Let's talk solutions. The government, nicknamed Doge for the sake of humor, aimed to cut $500 billion, has two options. As we mentioned spending and income previously, the government needs to either cut spending or increase income. Cutting spending might be able to see the results faster, but deciding where to cut is tricky. Defense spending, at $800 billion annually, is often debated. Could the US scale back without compromising security? Maybe, but that's a tough sell politically. Social programs like Social Security and Medicare are the biggest chunks of the budget, but cutting these would spark public outrage. Other areas, like education, infrastructure, or foreign aid, make up a smaller slice of the pie, so cutting there wouldn't save much. Another option? Raise taxes. But here's the thing. Higher taxes aren't exactly popular, especially during times of inflation. Alternatively, the government could reform the tax code to close loopholes, increase tariffs on imports, or sell federal assets to raise cash. But each of these comes with trade-offs. If you want to learn more about tariffs, we have another video about tariffs and Trump's trade war. I'll leave the link down below. Since cutting spending is tough and raising taxes is even less popular, Doge might resort to trimming government agency budgets, or even disbanding some agencies altogether. According to Elon Musk, the administrator of Doge, there are currently 428 federal agencies in the United States. Let that sink in. Over the country's 248-year history, we've essentially created nearly 2 new agencies every year. Chances are, most of us couldn't name half of them or explain what they do. But here's the catch. Just like slashing Social Security or hiking taxes, laying off government employees is far from a crowd pleaser. All these actions are like pulling the plug on the music when everyone's dancing at a party. The real question is, how will Doge handle this delicate balancing act? So, what else can be done? You know what? We could always create a GoFundMe for America. Can you imagine that? Donate $5 to save Social Security? On a serious note, there's no easy fix, but action needs to be taken before the snowball turns into an avalanche. Do you think Social Security and Medicare should be off limits for cuts, or is everything on the table? Should the US focus on cutting spending or raising revenue to solve its debt crisis? Can Musk and his Doge colleagues get the job done? Let us know in the comments below. Your thoughts matter, and we love hearing from you. That's it for today's video on what happens when the US runs out of money. If you learned something, or just want to share this financial roller coaster with friends, don't forget to like, share, and subscribe. Thanks for watching, and see you next time.